All right, everybody. Good afternoon. It is great to be with you all here again today. Happy Monday to you all. Hope you have had a great and wonderful day wherever you are joining us from. We appreciate you all coming in. It is now just after 3 o'clock, so we are going to get this thing started here. In 1 second, just trying to do one other thing. All righty. Thank you so much. As I said, thank you so much for joining us here today. This is a kind of an interesting time to be joining us. A lot to talk about here today. We wanted to do this again to give everybody an opportunity. After we did this, I think it was 2 weeks ago that we did our first presentation with the good folks who have been kind enough to join us again here today, with Ron and Anthony as well. Joining us back here today to have the opportunity to have some more questions be answered and have an opportunity to discuss with you guys what's happening in the world of the PPP program, in the EIDL program. It's kind of been an interesting day on this side of things. For those of you who have been paying attention to the news, two things have happened in the last, really within the last half hour or so. First and foremost, oil has hit negative dollars per barrel. So it means it costs more to pull oil out of the ground. People have to pay somebody to get oil out of the ground. And the second thing is Congress has put out some new guidelines about what they're doing with the PPP program, or should I say what they are not planning on doing with the PPP program. So a lot of good things, a lot of good opportunities to talk about here today. We wanted to bring Ron and Anthony back in to kind of talk about where they are with things. But before we get into that, I want to give people an opportunity here where they can go ahead and put in the chat box something that they are really happy about, something that's happened that's been positive to them, something that they've been excited that they're wanting to share. Maybe they were one of the lucky few to have their loans approved. Maybe they've had something in their business go well in the last couple of weeks. So just go ahead and start putting things in the chat box here whenever, if you have any good news that you want to share. Trying to find good news where we can. So if you do have something you'd like to share, by all means, drop it in the chat box. And then we'll go ahead and get this thing started here in a few minutes. I'm going to go ahead and still healthy. Yep, that's a good thing to share with at this point in time as well. And while people are going ahead and doing that, what I'm going to go ahead and do, I'm going to go ahead and unmute you, Ron, and you, Anthony, and allow you guys to kind of take the floor a little bit. And share with anything that you like to start with. Ron, since I have you in my, actually right next to me, I'm just gonna go ahead and unmute you, or you're already unmuted there. Perfect. And just kind of let you kind of take the floor for a few minutes and see what you've seen the last couple of days, what's caught your attention, what's caught your eye, and we'll take it from there.
Yeah, that sounds great. Thanks for having us back again. We got a lot of questions after the last presentation, so we figured we would follow up with some more guidance that we actually received last week for self-employed individuals and kind of give everybody an update of where we think the program stands and kind of the next steps of what's going on with the program. Interestingly enough, I saw that Shake Shack
paid back their loan.
Yeah, they're paying back their $10 million loan.
What a world to be able to that in.
Yeah, the explanation was we can get it. We can get the money elsewhere. I was like, why'd you even apply for the loan if you could get the money elsewhere and let other people kind of get a bite at the apple? But very interesting to see what's transpiring. I bet you'll see a couple more companies follow suit that way, just for some good publicity on that. But it's just interesting. I mean, like you said, we're following this thing by the hour right now to see kind of what passes Congress as far as additional funding into this program, because we've counted it up on our end. About a third of our clients got the PPP loan, 2/3 didn't. And talking to some other bankers and such, that's kind of the consensus. Out of the $349 billion that was appropriated for this program.
I guess there's one thing that we can kind of lead in. That's a great point that you're making, Ron. I think it's a great point to those people who applied for the loan and were either not approved or approved and haven't gotten your money yet, or you weren't approved. I think you're actually more in the majority than you are in the minority on that
Exactly.
one. There's nothing to be upset about on that front, so to speak. And I think it's going to continue to evolve, but I'll let you take it from there, Ron.
No, I agree with you. We have a lot of clients that are upset, to be honest with you. I mean, we've had some clients that filed the first day that it was available, and they got left out, just like a client that filed a couple days after. It's just this program has been poorly run since the beginning. I mean, they issued guidance for self-employed individuals after they were supposed to file for this thing. So we made a couple of assumptions on some of our self-employed where we're going back and correcting some of those applications as far as some of the things that we thought the legislation was going to say, and it came out and actually said the exact opposite. So I think that's a great segue into kind of getting into our presentation here and talking about some of the things that we have to update. Unless you guys have any other thing that you want.
We have some data that we'll share on the back end. I'd rather let you guys kind of take it from there. We have some questions as well as we'll go along, but by all means, let's hear what you guys have to say.
Okay. So kind of where we're at now, as everyone knows, all the funds that were initially appropriated to this program have been exhausted. On April 3rd, there was 1 million businesses who filed for the PPP program. 349 billion was appropriated for this program, and talking to some of the bankers that we know, there was over $1 trillion that have been requested through this PPP program. So again, that's kind of where that third number comes from, and it kind of holds true throughout our client base as well. About a third of the clients have gotten funded on this thing. I think I was looking that they're trying to put another 350 billion, the last number that I saw on the internet, but even another 350 billion, it's not going to fund everybody's application. So there's still going to be a little bit of a race to make sure that if your application isn't in, get it in as soon as possible. And then also, when you put your application in, the one thing that you want to make sure that you do is talk to your banker. And I'll give you a story of one of our significant clients who kind of got left out of the dust here. They have about 60, 65 employees. Their PPP loan was $1 million. We filed April 3rd. It was probably about noon on April 3rd that we filed for their application. Unfortunately, they did not get any funding, and part of the reason being is they went through a large national bank, and what that large national bank did first is it was taking care of its high priority customers, which for better or worse, I mean, I guess I can see their side of that situation, but they were supposed to go first in, first out. And then the other thing that we ran into with this client is they uploaded with their support documents Excel files as opposed to PDFs. So what happened was once they didn't, there's a checklist that the SBA is going through, and their files weren't in PDF format, so they just went on to the next one, sent out an email saying, hey, we need this stuff in PDF format, and then they went on to the next one. It didn't hold their place in line, so to speak, or hold their place in line for the funding. So we ended up getting that resolved, but once we got it resolved, we realized that it was too late in the game to get funding. So we're hoping, obviously, whenever we hear guidance, whenever we hear that they're going to open this up again, that they'll be one of the hopefully first ones on the list, because they have a complete application in with their bank. And that's what I'm urging everyone to do right now is get your applications in. I do know some banks are saying that they're not accepting them, but
you took the question right out of my mouth, which is if you have people right now who have not been able to get their the questionnaires and all the information that they need to get in, or their banks aren't even accepting their loans requests right now, what is the one thing you're telling your clients right now to do in order to either A, get more information, B, sit back and wait, or potentially even maybe even 3, go towards that EIDL program that is also still potentially still available?
Yeah, so right now what we're telling our clients is get all your application stuff together. Make sure that you're communicating with your bank, because that's the biggest thing right now, is to make sure that you're communicating and make sure that you're getting your paperwork to your banker in the correct way that they want it. Because it's bizarre that every bank seems to be a little bit different here. Every bank's asking for a little bit different format. They're asking for a little bit of different information. So don't be afraid to call your bank, say, hey, I want to apply for this program. I have my application. What exactly do you guys need to substantiate the numbers on here? And we'll talk a little bit about that in the next part of Anthony's presentation. Is we got a little bit of guidance of what the SBA is recommending to get from especially self-employed individuals. We're recommending you call your bank, ask if they're taking applications. We're recommending that you make sure that you have all your paperwork together. And if your bank is not accepting applications, because we found that some have said, no, we're not accepting applications. We know a couple of banks that are taking applications that will take you even if you don't have an account with them. So just reach out. You can reach out to us. I can give you a couple names, or I'm sure you guys in your group have a number of contacts with Nick and his team that they can help you out and probably provide a banker that will take an application. Because don't forget, the bankers actually receive a fee to process this application. So many of them have a lot of motivation to get these applications through their bank.
Sure. What are you hearing right now? I know a lot of the questions that we've gotten since the last time we did this was for the self-employed people who are worrying more about the effects of this delay coming down the line, and people saying that they haven't had an impact up until probably this point in time, but if this continues on, it's only going to get worse and worse. What are you hearing about the self-employed people who the original PPP plan wasn't going to be able to do anything for, but as new guidance and new guidelines have come out, they are now able to do something?
And Anthony, I'll bring you in on this question because one thing that we've been looking at is for clients who have not been able to get this PPP program is for self-employed people to potentially get on unemployment. And Anthony, maybe you can kind of talk about that a little bit while we're on the question.
I unmuted you, Anthony, so you go ahead.
Yeah, so the last I checked, Massachusetts specifically was going to be up at or before the end of this month for unemployment for self-employed individuals. At this moment, I'm not sure if they're up and running on that yet. I'd have to circle back and check with the Mass DOL. However, there is a little bit of interplay between unemployment benefits and this PPP loan program. I heard from a colleague, what's happening is if you're eligible to apply for unemployment, you certainly can do that as a self-employed individual. However, if you also have a PPP loan interest and you have an application outstanding, how that would work is you would be unemployed and you would be receiving your benefits, from the state and perhaps the Fed also. And then what would happen is if your application is accepted for the PPP and you decide to follow through and take on that loan, your unemployment status would be no more. And upon your receipt of those funds, you would be required to call the state and let them know that you're no longer unemployed as of that moment, and you would continue for the next 8 weeks, otherwise known as the covered period for the PPP loan, as not being unemployed. And then as soon as that 8-week window ends, you then can go back on unemployment. So there is a little bit of interplay, if you will, between the unemployment benefits and the PPP loan.
Okay, so that's interesting. So when you say that there's the ability to go ahead and as soon as you get your PPP loan, in the interim, if you have the ability to, and it does look like Massachusetts has opened its ability to apply for unemployment, you're advising people to go ahead, get the unemployment benefits that come with it until you can subside that PPP loan coming in?
Yeah, it's definitely an option. You can certainly do that. You can, apply and get on unemployment as an independent contractor, as a sole proprietor, as a self-employed individual. While in the meantime, your PPP loan, whether your application's in and you're waiting for approval or you're going through the process, while that's going on, you're still on unemployment. You then, tentatively you'd be cleared for the loan. They'd give you probably a 48-hour notice as to when the funds would be deposited into your account. You would then let the state know that you're no longer unemployed because you're receiving a PPP loan. That would continue for 8 weeks. That's the covered period under the PPP loan. And then as soon as that covered period ends, then you'd be eligible to go back on unemployment.
Do you lasagna? Do you like eating it or what?
No, it's tasty.
And to follow up to Anthony's point, I think timing here is actually pretty crucial because, again, we don't know exactly when they're going to open up this new PPP or refund this program. And some people need to probably start getting some checks in because it's probably been a couple of weeks before they've been able to really put a lot of work in. So it might make sense to potentially apply for unemployment, get some benefits, because even if you do qualify for the PPP, the bank doesn't have to fund that for another 10 days, even after your application. So, I mean, you could be a couple of weeks down the line before you're receiving your benefits of the PPP program.
I think we just hit on one thing that's important, Ron, and that's the misconception that these are instantaneous loans. You're going into the bank, you're applying for the loan, it's instantaneous. They're handing the money right over to you. That's not the case. As you just mentioned, there is that 10-day waiting period and grace period where you have to sit by idly and just wait for the money to be deposited into your account. It's by no means instantaneous.
Yeah, and it's 10 days from acceptance too. So, I mean, even if you put your loan in the first day that it opens back up, I mean, they're going to get flooded with these things. As we saw before, they weren't exactly quick with approving people. So, again, I think it could be a couple more weeks before you receive any funds for a PPP. So unemployment, again, may be an option for you guys.
I'm going to take a step back too, Matt, if that's okay. And just to clarify for everybody on the call. So what they're referring to, the PPP, the Payroll Protection Program, that was for W-2 employers that issue W-2 employees. Essentially, I mean, as far as how we're addressing it in this particular conversation. So 1099 self-employed individuals are absolutely still able to apply for either unemployment or what, as Ron just clarified, right? So unemployment is first, but if you also have, tell me if this is accurate, Anthony and Ron, if you also have individuals underneath you that are employed W-2 that you have applied for that PPP W-2 payroll program, right? So you're able to maybe gather, you can't do both at once, right? Like once you get one set of funds, you have to then pay back the other. Is that accurate?
Yeah, and a lot of times you got to measure that benefit, right? So you got to measure what you could get in unemployment as well as the additional federal $600 that you might be able to get versus the PPP loan and how you're going to be able to use that funds and get that forgiven. So there is a small kind of cost benefit analysis that needs to be done. And I know Anthony has some examples that he's going to kind of walk us through later on.
I think you're exactly right. I think as we talked about 2 weeks ago, it's fluidity. There's a lot of fluidity and changing, evolving things in this point in time, and being able to roll and kind of work within the system, so to speak, right now is imperative more than anything else.
Exactly. So I'm going to give a little bit of overview of the guidance that we got last week from the PPP program, and also kind of talk to you guys about some of the questions that I know I still have after reading the guidance that the SBA gave out. The SBA is actually doing a remarkable job of issuing guidance that initiates more questions. So we're here to help you guys. Ask some questions if you have them. If not, if you guys want to email us, again, I think our email addresses were in the emails that Nick sent out. So feel free to reach out to us. I think about a dozen people reached out last time. So happy to help. So just to give you guys a little bit of an overview on kind of what I was talking about as far as making sure your documentation matches your application. Part of the guidance that the SBA released was indicating that they're going to be looking for Schedule Cs for self-employed individuals, regardless if you filed your tax return so far. So essentially, if you haven't filed your tax return right now, I would try to put together a Schedule C that you can support the numbers on your PPP application. That's, again, going back to my point, call your banker, make sure you know what they're looking for. If they're looking for that Schedule C as part of your application, make sure you provide it. You don't have to file your tax return because, as we know, the due date for filing our tax returns has been postponed to July 15th, but they're still going to be looking for some sort of substantiation to substantiate the number on your PPP program with your Schedule C. Another part of the guidance that was released is what the funds can be used for. So for a sole proprietor, self-employed individual, the funds can be used for rent, utilities, and business mortgage interest obligations. But the key for sole proprietors and self-employed individuals is that obligation had to exist in 2019. The difference between a self-employed and a business, for some reason they allowed businesses to get all the way up to February 15th, 2020. So if you had a rent obligation in February 1st of 2020 and you were an S corporation, you could utilize the funds from the program to pay the rent. But if you were a sole proprietor, they're saying that obligation need to have existed in 2019. So they're not giving you that extra January, February 15th timeframe for those obligations to exist. I don't know why they did it that way. No one really knows why they did it that way. But that's how the SBA guidance was issued. Part of it, I think, it's to try to substantiate the PPP loan program and the amounts used for loan forgiveness going forward. But it's just an odd date to not have conformity between S corporation businesses and partnerships versus sole proprietors. The other thing that it was pretty specific in saying is that this needs to qualify for business mortgage obligations. So the business mortgage obligation, so essentially, let's say we have a business use of home, and sometimes we deduct our mortgage interest and real estate taxes as part of our business because we have an office in there. It seems to say that the guidance says that the interest would not qualify for loan proceeds forgiveness. So it has to be a business obligation, maybe a truck that's under the business name or something like that for interest, or if you own the real estate or you're paying mortgage interest, it has to be a business obligation. It can't be a personal. And then funds. Part of what the funds can be used for are utilities. Included in utilities was this wording, transportation cost. We got some guidance on what you could qualify as transportation costs. That guidance would be gas for a business vehicle. So that's kind of interesting and I think kind of helpful, although I'm getting about 4 weeks to the gallon right now with my car because I'm not really driving anywhere. But for individuals in hopefully within the next, say, 8 weeks, we're up and running, and part of the loan proceeds can be used for gas. But as you just said, oil just went under $1 a barrel. I don't know if they're going to start paying us to take the gas.
That's certainly where it's trending toward. There was negative 18 right now.
But let me also go back because I'm kind of jumping the gun here, and I'm assuming that everybody in this presentation was in the other presentation. And I guess we could have some new people in here that weren't in the first presentation. And so what you can utilize these loan proceeds for are compensation, rent, utilities, mortgage interest. But 75% of it needs to be in compensation. 25% can be in non-compensation costs, which would be your utilities, your rent, and your business mortgage obligations. With the sole proprietors, and I know Anthony will get into this in detail, we have a new concept called owner compensation replacement for loan forgiveness. So essentially what's happening here is if I had a business and I was getting paid a W-2, that's considered payroll costs. But as we all know with sole proprietors and Schedule C filers, a lot of times you don't have payroll costs. You're just taking a drawer from your business as your owner compensation. So what the guidance is letting us know is that that can qualify for loan forgiveness. So essentially, you can take this PPP loan as a Schedule C person and pay yourself. There's a maximum of $15,000 out of the $20,000 that you can get. And again, that's a draw to you that's going to be completely forgiven. And part of the other, part of the guidance that we got, there was a little bit of confusion is if I was a partner in a partnership and I'm getting self-employed income on my K-1, do I have to file for the PPP program or can the partnership file? And the partnership can file and include the self-employment income of the partners. They tried to do this to reduce all the paperwork that would be coming into them to say, if every partner and every partnership was going to be filing for this PPP program, it would be kind of a lot of paperwork. So if I have a partnership and I have 4 partners and their self-employment income is $100,000 each, my PPP loan application can be $400,000 divided by 12 multiplied by 2.5 months. So the $100,000 cap is on the self-employed income per the partners. And again, I might not be going into a lot of detail. Anthony's going to go into much more detail. I'm just trying to give you some high points on the guidance that we got, and then we'll have Anthony kind of get into the weeds on it a little bit. There's a couple remaining questions that we have. The loan forgiveness costs need to be incurred and paid between the 8-week cover period, so to speak. So you have to incur and make the payments between February 15th and June 30th to qualify for loan forgiveness. The problem that we're going to potentially run into is if we have $350 billion coming into the program next week, and then again we have another tranche of money coming into the program a couple weeks later on because we realize, hey, we're going to be shut down for a little bit longer. We're going to get past that June 30th date for loan forgiveness. And I think the SBA will need to give us guidance or at least extend that 6/30 to maybe July 30th or July 31st so that you guys and everyone that gets these PPP loans will be able to utilize the money in the 8-week period after you get the funds dispersed, after you get the loan dispersed to you. Because I think you're gonna find that you're gonna run up into that time period.
I want to hit on that real quick because I think that's probably one of the most important things that you've talked about so far and up until this point in time. There's been a lot of great information so far, but I want to make sure that people understand that exactly what you're talking about there in a little bit better detail. There's a common misconception out there right now that just getting this money means I have the unlimited amount of time to then A, use the money, and then B, pay the loan back if I have to fall into that category of paying the loan back. Can you dispel at least part of that myth or give credence to the part that actually is true so people just don't have that common misconception I think that's floating out there that A, it's free, it's truly free money. Yes, there's a part of it that's free. And B, the money can be used whenever you see fit.
I agree. There's a pretty big misconception because a lot of people are still saying, hey, I get a PPP loan and let's say I have employees. A lot of those employees aren't coming back to work either. Most of them are probably still staying home because our doors aren't open.
Yep.
The big part of this PPP program was to get everybody off the unemployment line. Everybody was filing for unemployment. We saw the staggering numbers. I think they're coming out again either tomorrow or Thursday to see what happens for the unemployment this week. But the point of the PPP program is to get people off unemployment. But to your point, once you get a PPP loan, the money has to be spent within the first 8 weeks of getting that loan. So essentially what you have to do is you have to go to your employees and say, hey, you're hired back. You might not have to work. You might not have to come into work, but you're hired back. So you're now not eligible for unemployment. We're going to pay you your salary going forward because that's kind of how this program was built is it's off of payroll costs. So we're going to be able to pay you your salary going forward for the next 8 weeks. And then after 8 weeks, if we're still in this situation, we'll have to see if there's any more information from Congress coming down or you'll have to go back on unemployment. But the whole point of this program was to get everybody off of unemployment, even if you're not back to work. Even if you have employees and you're not back to work, you're off unemployment and you're getting paid like you would a normal salary. So to your point, yes, the time period is 8 weeks after you get the loan, but there is a covered period. So, and that's kind of what I was trying to explain, is that if you get your loan and then 8 weeks goes by and you're after June 30th, I think Congress needs to give us some sort of further guidance as far as
Then what?
utilize cost after that time for the loan forgiveness. And I think the answer would be yes, but it's just, I don't think anyone imagined this program getting to where it was today.
No, I wholeheartedly agree with you on that side of things. But I think you're exactly right. I think the next shoe to drop is the then what.
Exactly.
And that right now just hasn't been made clear. And I'm hoping there is some credence given to that. Is there anything else that you want to get into before we get into the presentation, Ron?
Oh, I've been actually going through the presentation.
Oh, perfect. There, okay. There we go.
So I got a couple more things, and then I'm going to.
No, by no means. I'm not trying to rush you. Take your time.
Yeah, and I'll turn it over to Anthony, and we'll start the presentation on where his slides go. So mine was mostly theory, anyways. The other thing that we don't know are accrual versus cash basis. So when you're on the accrual basis, the expenses are kind of deductible when they're incurred. When you're on the cash basis, the expenses happen when you actually deliver the cash or pay the cash out to a landlord or the mortgage company or what have you. It's really not clear to me during the covered period is if I have a payroll that is accrued up until June 30th, but for some reason doesn't get paid until the first week of July, would those costs count for the loan forgiveness piece? It's also pretty much unclear on rent payments. And again, I don't think that they want you to prepay rent to meet your 25%. And I don't think they want you prepaying a rent for a related party, especially if you own the building and then you were also renting to yourself. Again, I think the law is pretty clear that you need to have the rent obligation in place in 2019. But I do know, and I've seen some rent obligations that are month to month. So I still think that you have fair market related party rental rules in play here. Again, they're not looking for people to abuse this. They're looking for people to essentially use this money to stay in business for the next 2.5 months. And then if we're still in this situation, we'll go from there. And then the last piece of information that I wanted to kind of go over is, and this is the one I've really been struggling with for the past couple weeks, the cost that you use your loan proceeds for, are they going to be tax deductible in 2020? For instance, if I use my loan to pay for payroll and I get that loan forgiven, is that payroll cost that I just used that for a tax deductible expense in 2020? To me, it seems like you'd be double dipping. You'd be taking expense and then also utilizing that expense for loan forgiveness. So I don't think they're going to allow you to do that, but it's certainly not clear, and it's certainly not spelled out anywhere if you can utilize those costs to also take a tax deduction. From what I'm hearing is a lot of these loan forgiveness will be considered tax exempt income, and any expenses related to tax exempt income are non-deductible. But there's still a number of different questions I have with that. Is some of these payroll costs for businesses qualify for Section 199A, which is the QBI deduction that was part of the Tax Cuts and Jobs Act. So, and a lot of times what we're doing is we're matching that deduction up to a client's W-2s or W-3s. So if that is no longer deductible for tax purposes, how is that gonna, and I know I'm going down kind of a tangent here, but how is that gonna also apply to your QBI deduction for 2020? And again, it's just not clear right now how this is all gonna work from an accounting standpoint. But
that's it too, Ron. I mean, to jump in, like, whether you're an employer with W-2 employees or you're a 1099 self-employed contractor that, can substantiate with your Schedule C on applying for the PPP program and getting your cash in, that's free money, right? And $1 is better. $1 as a credit, as a free money, is still better than 30 cents on the dollar as a deduction. So I think that's right. Bottom line, free money.
We would take the loan forgiveness all day over the tax deduction without a doubt, because that's more valuable. It'd be nice if they let us double dip and take it both, but I just don't see that's going to happen. Right.
So that's really good to and Ron, if you had slides, and Anthony, you too, if you guys have slides, feel free just to hit that share screen, and you can pop your slides up right here, and we'll all be able to see them too. I feel bad if you had to add some stuff.
No. Like I said, a lot of the stuff that I was going over was more guidance and more overview. I'm going to have Anthony get into the weeds, and he can probably share his screen, and I'll put him on the spot to see if he knows how to do that.
Awesome.
I think just to kind of summarize everything that we were just talking about, to take it from the technical side of things, where a lot of that may have gone over people's heads there who aren't necessarily Ron and Anthony with the same perspective there. I think, as I said before, the key word here is fluidity. This is going to be ever evolving. This is going to be ever changing. And there's going to be more guidance going out. As Ron was alluding to, the thing that the government doesn't want you to be doing right now is double dipping and using these funds in ways that they don't envision you or would like to envision you using these funds for. So I think there's going to be some more guidance coming out there, and fluidity is most definitely the name of the game on this side of things. And I think for the people who are worrying about how it's going to affect their taxes on down the line, I think are maybe getting caught up on the wrong side of things right now. Not that there isn't some level of credibility there that needs to be given to it, but that's maybe putting the cart before the horse a little bit too.
Yeah, and I'm looking at the chat right now. A lot of people were having problems with Bank of America. They were one of the first banks online, but we were also having some problems with Bank of America. We've actually found that if your bank is more in tune with doing SBA lending, it was a very quick process for people. But some of these national banks that don't deal with too much SBA lending, it took a little bit longer than we were expecting.
Going off on that, you kind of touched on this a little while ago, and I want to circle back to it because I think it's actually important. We didn't touch on it then. 2 weeks ago when we were on this call, we said the biggest things to do is to go to the bank that you have the relationship with, because they know you, they know your banking, they know what you're doing, they might know your needs better. But now it sounds like you're saying if there's a bank that you feel already has a relationship with the SBA, it might be better for you just to go ahead and do that. So has your guidance on that sense changed?
It's changed a little bit. I would recommend that you first call your bank. But again, I would also recommend that there's a lot of people in this chat room. Some of them might have been funded. Some of them might not have. Talk to these people. Talk to Nick and his team. These guys, they have a lot of relationships. They know a lot of people. Again, we found that some of the smaller banks were actually a little bit more easier to deal with in this process than the larger banks that were able to get they were able to get the SBA applications quickly, but the lag time to get approval was a lot longer than a bank that was approved, already a frequent SBA lender. So it's a tough thing because some of those banks will still say, well, you don't have an account with us, you're going to go to the back of the line. I think you got to kind of weigh your options. I would say that my 100% guidance of going to your bank is probably not the same right now. I'm going to go to the banks that I know right now who have been helping my clients and improving these PPP loans a little bit quicker, and seeing if they'll say, hey, will you guys mind taking another application from a taxpayer who's ready? They have all their application together. It's just they're dealing with a bank that is a little bit slow to approve some of these loans.
Sure. If it helps too, just some relationships that are local to us that we're still, Allie just said she used Eastern Bank. Eastern Bank was one of them that was pushing out loans as quickly as they could. Enterprise Bank was pushing out loans as they could. We put ours personally through DCU, And similar to what you had said, Ron, earlier, they were great at first. We had everything ready on the 3rd, and then due to reformatting issues, they wanted us, this Excel sheet and this PDF and this Excel sheet. We did not make the cut, even though we had everything ready on the 3rd of April. That said, I did hear all of those banks are better than BOA, Chase, Wells Fargo. Like they all went in a rush to try to get that technology and the portals up and running without actually submitting applications like the smaller banks were.
And this is entirely a case that I think some banks rushed it because, as Ron alluded to, they wanted the fee to paid on approving of the loans, and I think this was just a speed to rush thing.
Yep.
So I think now is a perfect time to transition it over to Anthony and his slides. He's going to walk through the guidance a little bit more thoroughly. I just wanted to try to give a kind of a high level kind of talk about some of the bigger things that I saw and kind of talk to you guys to see where I see things going. Anthony will take it over, and I don't mind. I can answer some questions in the chat if people want me to, or if you want to wait and just periodically just announce some of the questions, and so everyone hears them. Whatever you guys want to do, I'll do.
Gotcha. Yeah, I think we'll announce some of the questions, but feel free, if you're in the chat anyway, you can start responding. And
Okay.
Before Anthony takes over, just so that everybody does know that's on this call, we do have, we were fortunate enough to have access and permission from John Burns, a national real estate statistician, to use all of his national real estate statistics on what's happening in the marketplace, what's happening to the economy. This particular meeting, it's more important with obviously what Ron and Anthony are sharing with us. So I want to make sure that information gets out because you still need to be ready for the new round of applications coming out. So we want to pay attention to them. Based on how this presentation goes today, we will be having the same time, same place next week, Monday at 3 o'clock. Feel free to tune in there. Ron and Anthony will certainly be invited if they can make it to do another update on the PPP and self-employed programs. And then depending on, again, the timing today, we'll either push those stats out today or we're going to wait and do that next Monday at 3 o'clock. But you definitely don't want to miss those because we were very fortunate to get access to that data that they use to supply Toll Brothers, most of the national lending institutions like the Wall Street and Lending One and Lima Ones of the world. Like he supplies all the data. So we just finally got it like 5 minutes before this thing came on. So we don't have it in a sexy presentation or anything, but I love that, Ron. Thank you for your share, and we'll head over to Anthony. Do you know how to hit the share screen, Anthony? For your
let me try this here for 1 second.
Matt, you might have, as host, you might have to hit there's a remote button. I don't have access to it. If you see that remote button, click that, and then you can actually that just gives Anthony access to your screen. But you might have to, if you go to Anthony's name in the chat box, make him a co-host or co-presenter. That should be able to get him to share his screen.
There we go. There you go, Anthony. You should be able to do whatever you need to.
All right, so let me.
Oh yeah, go bees.
All right, so can everyone see my slides?
Perfect.
Awesome.
All right, so kind of before I get into the nitty gritty a little bit, just kind of wanted to, for people that might be new on the call, like Ron mentioned, or need a refresher, how did we get here to this point? And, like we discussed, the Paycheck Protection Program, the PPP program, loan program was, developed to incentivize people to, stay off unemployment and maintain your workforce, maintain your payroll throughout this crisis. And, at first, the first day you were eligible to apply, April 3rd was, small businesses with payroll. And, at that point in time, it was a week later that self-employed individuals were going to be eligible. But, there were some questions as to, if I'm self-employed, I don't have employees, what do I do? So that was kind of our, from the first presentation, we had some of those questions where, if you're self-employed, we think it's going to be this situation, but we're not sure, how do I get the loan? How do I get it forgiven? And fortunately, like we mentioned last week, we got some guidance to those specific details, and the SBA sent out interim final rules specifically for self-employed individuals. So I'm going to go through some of the details of that and some of the intricacies of some of those qualifications and so on and so forth. So with that, If you're a self-employed individual, a sole proprietor, an independent contractor, you're eligible for the program. A couple of, things that are required is you have to be in operation on February 15th, 2020, and you have to be able to prove that, which we'll get into a little later. You have to have filed or plan to file a Form 1040 Schedule C for year 2019. Like we discussed, if you already filed your return, fantastic. You should be able to just pull that schedule. And if you have not filed your return yet, we recommend sitting down and going through your 2019 activity, whether it be, you have books and records, or you have a bookkeeper that can provide you, a P&L, and just trying to generate at this point in time a prospective Schedule C for 2019 that you can substantiate. I think that's the important thing, is you want to be able to provide something that you can certify that, a lender can rely on those figures, because that's going to be the driver of your loan. As Ron mentioned, partners in partnerships are not eligible on their own. If you have a partnership, those loans are going to be extended at the partnership level based on self-employment income. And then, as we touched on before, PPP loans will affect eligibility for unemployment. Just to double down on that piece, you're eligible to be on unemployment as a self-employed individual, which you have not been able to do that in the past. You're able to collect the unemployment benefit from the state, whatever you're due, plus the additional $600 from the federal government on top of that. As we mentioned, a little bit of the interplay is going to be the back and forth between if you're unemployed and you get the PPP loan, and just kind of, doing that cost benefit to see, what makes the most sense for you and your business. So that's kind of the eligibility piece that came out last week.
One question that we just had going off of that I wanted to go ahead and get in there is, what if you had a W-2 job that I got laid off from that is separate from any real estate businesses that I own?
That's a good question. My understanding is that you're not eligible. I mean, I can't imagine you'd be able to receive unemployment for a W-2 job and then separately as an independent contractor. It's probably on a person by person basis. So I'd imagine that you'd roll all that into one application. I know that on the state's website, they ask for, your application. They're going to want to be, they're going to want to see pay stubs, W-2s, 1099s to validate employment. So you may not be able to differentiate between those two jobs, but that's just my thought at this point in time.
And then second question is do you think they would accept a 2018 Schedule C that has already been filed? As far as I'm aware, that's a no, but am I incorrect in that?
That is correct. We actually tried that with a client and it didn't work. But the follow up, I mean, and I'm not sure if Anthony, if you touch on this, but some of the guidance that we also got is so contradictory to businesses, but a Schedule C employee, they can't use their health insurance and they can't use their retirement plan in their PPP loan application, which it's so contradictory to businesses, because if you were a W-2 employee, you could include that stuff. So, but I'm sure you'll touch on that, Anthony.
Yeah. So as far as calculating the loan amount, just referencing back to our last session, the average monthly costs were, three keywords that we were driving from our last session, multiplied by 2.5, essentially 2.5 months on average of benefit is the key. So for a self-employed individual filing a Schedule C, with no employees other than you the owner, if it's just you, you don't have any W-2 employees, you're going to be looking at your Schedule C, the net profit capped at 100,000, divide by 12 to get your average monthly number, multiplied by 2.5. So essentially up to 100,000 of net profit, you're going to figure your average monthly net profit for 2.5 months. And that's going to be the amount that you're eligible to apply for if you have no employees. So if you have no wages, no employees, that's going to be your formula. As Ron mentioned, the the cap there, the max is about 20,000 and change if you do the math, but that's how you'll figure your calculation if it's, no employees, just you on the Schedule C. If you do have employees, W-2 employees, it gets a little tricky in the sense that you're going to have your same calculation net profit from your Schedule C capped at 100,000. You're going to add the compensation paid to your employees in 2019. You're also going to add the benefits paid on behalf of your employees for 2019. Divide that total amount by 12 to figure your average monthly, and then multiply by 2.5. And you'll notice I have some asterisks in there for just some detail as far as what counts as compensation. Gross wages and tips paid to your employees up to 100,000 annualized per individual, per the IRS Form 941s. And if you have any fringe benefits or any pre-tax employee contributions, that gets factored in as well. Benefits paid on behalf of employees includes the employer health insurance contributions and retirement, and state and local taxes on the employee compensation. So you're going to factor in, similar to if you had an S corporation or, a situation where you weren't a Schedule C filer, where you have the payroll costs plus the benefits. Same kind of formula. The only difference being you're on the Schedule C. But if you have employees, you do get to include those two line items. Loan documentation. This is going to be key. So specifically in the interim final rule, like we mentioned, a filed or estimated 2019 Form 1040 Schedule C to the best of your ability is going to be required to be submitted. You won't be able to apply without it. So like we mentioned, either pull the Schedule C from the return you filed, or do your best to put one together that you feel comfortable and can substantiate at this point in time. Additionally, if you reference back to my first slide, you have to substantiate that you're self-employed. To do that, you would need to provide a 1099 showing, non-employee comp or other income, something along those lines. A bank statement, some sort of invoice that shows you're self-employed, other than just providing a Schedule C that you could just throw together. There has to be some other sort of documentation to back up the fact that you were self-employed. Those two are going to be at a minimum. And now, if applicable, relates to if you have employees and you're claiming payroll costs and health insurance on behalf of employees and state and local taxes, you're going to have to provide these 4 additional pieces of information to substantiate the payroll costs. At a minimum, the Form 941 that you file quarterly for payroll, along with any other payroll reports that you think would be helpful. State quarterly wage unemployment insurance tax reporting form, so essentially backing up the state and local taxes. Evidence of the retirement and health insurance contributions on behalf of the employees. And then a payroll statement that validates that you were actually in business that key date, February 15, 2020, just to show that you were in operation, you had payroll at that point in time.
Anthony, one thing that I want to mention here is for a self-employed individual, sole proprietor, this thing is going off your Schedule C net income. Included in that net income is depreciation. And including in that depreciation, you might have taken some accelerated depreciation, either bonus or Section 179, to reduce your taxable income. Right now, we have a client that's actually reaching out to us to say, I might want to amend my 2019 return that I've already filed in taking that depreciation on Schedule C to not take that accelerated depreciation. So I have a bigger number at the bottom of my net Schedule C. I might cost a little bit more taxes, but I might get a bigger loan at the end. So right now I'm actually running the analysis for one of our clients to see the cost benefit of doing that. To see if not taking that acceleration depreciation, but getting the loan forgiveness on the back end would work.
Yeah, it's a great point. I mean, obviously, if you have your return that you filed, you may just want to double check on the Schedule C that if you have an amount on the depreciation line, from there you can reference depreciation report with your return and just see if there was any accelerated depreciation taken. But it's certainly a good planning point. And again, the fluidity of the situation demands that you do a little bit of cost benefit analysis on your own or with the help of a professional to see, is it worth it from a numbers standpoint to forego that depreciation at whatever tax rate you're in for that loan amount. So yeah, it's a very, very good point.
I think there's a key point there that you just mentioned, Anthony, and I want to make sure that people understand it, which is not to just go ahead and rush this by any means. I think if there's one thing that people have learned from having gone through this from the last couple of weeks is that there are going to be opportunities here now to take your time, collect things, weigh everything out, and figure out what makes the most amount of sense. This is just something that you want to rush into because the opportunity is going to be there. There's a chance that you might get all the documents, get all your ducks in a row, come to find out that you rushed it, and now your loan's just sitting there and it's not approved. Take your time, collect what you need to do, weigh everything out, figure out what is best for you to do, and then take action. And again, talk to people like Anthony and Ron who are able to kind of steer you in the right direction there.
Absolutely. You want to lay out the entire picture and you want to trace everything all the way through. I mean, it might look like a good idea to do that to make some of these adjustments in that example, forego the depreciation on the front end, but then you kind of have to think about, okay, what's it going to be at the end of this year? What's it going to look like at the end of next year? And maybe even beyond that, it might be a sense that, maybe you need more equipment, next year or the year after, and you can make up for that depreciation in those years, or, you really don't have a sense of what those years are going to hold. You kind of have to look at the entire picture with all things considered, and the important thing is tracing everything through to the end ultimately. So yeah, that's a good point. You don't want to rush through this and twist yourself into a pretzel, because it would just be worse to rush through it up front and then have to rush through it on the back end to fix it, rather than just be thorough and take your time and make sure you get it right the first time. Because like we also mentioned, you could run into a problem where if it's not 100% correct, or if you didn't go slowly or carefully through it enough, you may have an issue with, a correspondence back and forth with the bank that might get lost and your application's held up, and, now you're in a bit of a pickle. So definitely you want to look at the entire picture and see everything all the way through for the ultimate analysis there.
One of the good question that just came through is, what happens if you get the PPP loan to cover your next 8 weeks of pay, but all of a sudden you do get paid out in those 8 weeks, and now all of a sudden you don't necessarily have needed the loan?
Well, you can certainly pay it back. You can certainly pay that loan back at any point. I mean, I saw some detail today that there's a limit to the prepayment of 20%, but that was specific to one bank. So I'm not sure how long that prepayment, quote unquote, is supposed to last, or if every bank is doing that. But I mean, certainly I have some clients that say, I'll take it as a precaution, and if I don't need it, I could certainly just pay it back, which I think is an option. I mean, at this point in time, I don't have answers on every facet of that payback piece, because like I mentioned, that was just one bank that I saw today that's limiting the payback to 20%. But my thought would be, if you don't need it, you could certainly just pay that loan back.
Well, what I would also say, Anthony, here is a lot of what we're doing with our clients is we're telling them to set up any PPP money that they get into a separate checking account. So it's easy to track the cost that they use for qualifying costs. Mm-hmm. What I would do is I would take that money that you get for the PPP, and this person mentioned that they had commissions, but if they had some payroll costs, or if they had the rent, the utilities and stuff like that, I would use those funds in that checking account to pay for the qualifying costs. And then the commission expenses and the commission money that you're getting in, used for non-qualifying costs.
I think it goes back to what I was talking earlier with you, Ron, about that misconception out there that people are saying, I don't have any money coming in, I'm applying for this loan. Oh, wait, now I have money coming in. Something's happened, done a sale or whatever the case may be. Now I have this loan. You can still use that loan. Exactly. There are a lot of different things you can use that loan for. Just because all of a sudden you have an influx of cash coming in potentially twice, once from the loan, once from business, does not necessarily mean that you were given the loan inadequately or incorrectly, so to speak.
There's still a lot of businesses out there that are operating that applied for this loan that are using the funds for the qualifying costs just to get the loan forgiveness. And then I would say for those people though, you always get a little bit uneasy when you have to certify that this harmed you, but you're still an operating business. So again, that's going to happen to people who get this PPP loan, and they also potentially, like you said, might get a commission in, or they get enough money in that they could make ends meet for the next 2.5 months. But again, utilize the PPP loan for the qualifying cost. The other money that you get in for income, utilize it for non-qualifying costs, because not everything qualifies under this program.
Absolutely. All right, let me see here. So as we've kind of been, hammering, the uses for the loan are very specific in nature. I have them listed out on my slide here. Proceeds can be used for owner compensation replacement, which is what Ron mentioned earlier. That's the net profit from the Schedule C. Just, kind of a different term there is the owner compensation replacement, due to the fact that you're not going to be receiving that net profit, realizing that net profit at a clip similar to that in 2019, just kind of replacing that that benefit of you taking the money out of your business as a Schedule C filer. Proceeds can also be used for obviously payroll costs, compensation and benefits, like we discussed for employees, mortgage interest on business mortgage obligations, like Ron discussed, has to be a business mortgage, rent, utilities, and interest on other debt obligations. Couple of things just to drive home on this piece is that business mortgage obligation term, like we discussed earlier. Business use of home puts you in a difficult position because that's not really a business mortgage. So trying to take the mortgage interest on your house that you use a portion of for business is going to be not available just because it's not in the name of the business. And that's also the same for someone who rents an apartment and has a business use of home deduction. Is that rent, you're only taking a piece of it for business. You're not renting that space under the name of the business. So just keep in mind that they have to be business obligations, and if you have a business use of home deduction, you're not going to be able to utilize that. The other interesting thing about the qualified uses of the loan is there's mortgage interest on business mortgage obligations, but there's also interest on other debt obligations. So you're able to use the proceeds for interest on other debts, not just mortgage interest. If you have a loan through your business on on some equipment or anything like that, it's qualified to be used for the interest on those obligations as long as they're under the name of your business. Credit card interest, anything like that in the name of the business. And then this last point, like we touched on earlier, you must have taken or been able to take a deduction in 2019 for the expenditure to qualify for use of proceeds. So essentially, you're not going to be able to take a deduction and use the proceeds for say business rent if, for instance, you weren't renting out that space or had any rent of any space last year. So that's going to disqualify you from using the proceeds for that deduction. So I mean, there's a couple of intricacies there that you just want to be careful of what you can use the proceeds for, and then additionally what qualifies for the forgiveness piece that we're actually going to move on to next. So the calling card of the program, the forgiveness piece, essentially, just from a top level standpoint, you're infused with these loan proceeds into your business or your Schedule C activity, and essentially you have no obligation to pay that back. So that forgiveness piece has some stipulations in the sense that you're eligible to forgive compensation up to $100,000 annualized per employee, plus benefits paid on behalf of employees, and this is what Ron mentioned earlier, not owners. So essentially, if you have a Schedule C activity where it's just you and you pay health insurance for yourself, you make retirement contributions for yourself, that's not going to be able to be included in the forgiveness amount because it's on behalf of yourself, the owner. Whereas if you had a Schedule C that had 5 or 6 employees, as an example, you paid health insurance on behalf of your employees, you contributed to retirement plans on behalf of your employees, those costs would qualify for forgiveness, but not those paid on behalf of yourself, the owner. So very, very delicate, intricacy there just to be careful of, because, oftentimes very, very common with a Schedule C filer is the self-employed health insurance deduction, which is great for tax purposes, however, not for loan forgiveness in the PPP program. And then, of course, as I mentioned, 100,000 is the cap per employee, as we've been discussing, but always nice to point that out. Owner compensation replacement limited to 8 weeks of 2019 net profit from Form 1040 Schedule C. So essentially, this is going to apply to a wide array of self-employed individuals, in the sense that, the question often raised, at the last session was, I have this business, I don't have employees, I received a PPP loan, what am I eligible to have forgiven? And, if you reference back to our last session, we didn't have guidance and we were kind of speculating, is it the entire amount? Is it none of the amount? Part of this interim final rule came out and clarified that your owner compensation replacement for the period of 8 weeks of the year is eligible for forgiveness. So essentially, you would take, 8 divided by 52, 8 weeks divided by 52 weeks, and you would multiply that by your net profit. That amount as owner compensation replacement is eligible to be forgiven. So there's a little bit of a calculation that has to be done there to get to that amount.
Yeah, and Anthony, I just ran the numbers really quick. So let's say we had a $100,000 Schedule C. If we divide that by 12 and multiply it by 2.5, the total amount that you could get for a Schedule C with no employees is $20,833. The owner compensation replacement is limited to 8 weeks for a maximum of $15,385. There's a little bit of a math error in the SBA guidance, because if you take 75% of the 2833, you don't get 15,385, you get 15,665. Again, we don't know how they're going to treat that extra $200, but again, this is what happens when you're drafting guidance so quickly to get it out to people. So, but again, to go back to this forgiveness, and I think Nick alluded to it, you always want some sort of loan forgiveness, some sort of credit over an expense. It's just much more beneficial to you as an owner. So if you do qualify for this PPP loan program, make sure you do everything you can to get it forgiven and use it for the qualifying expenses.
Yeah, it's a great point. The last few points on the loan forgiveness piece is, like we mentioned, mortgage interest on business mortgage obligations eligible for forgiveness. However, just no interest on other debts not eligible for forgiveness. So as I mentioned a couple of slides, or perhaps the previous slide, you're eligible to use the proceeds for business credit cards, leases on business equipment, and anything that you pay interest on through your business. However, that is not an eligible expense for forgiveness purposes. So although you can use the proceeds for that, you may just want to be careful, because that's not going to be eligible for the forgiveness piece. And then finally, rent and utilities, also eligible. Just be sure that those are, business obligations, as we mentioned. And then just referencing back to Ron's point earlier, specific to the rent, we're still a little unclear on, are related parties going to be stipulated to have anything changed on that front. Additionally, the accrual versus cash basis discussion, well, what if I pay, this month, next month, and the month after rent, once I get the loan proceeds? We don't think that that's going to be something that's allowed either. Additionally, the other piece that I'm assuming in this slide that we had in the last session, 75% of the loan forgiveness piece has to be for the payroll cost. So even if you didn't want to, front load that rent, you would have most of it disqualified anyway, I would imagine. So that's kind of the overview of the costs that are eligible for forgiveness for the program.
Want to ask a question that I've heard a couple of times from a couple of people just in talking, and specifically in the real estate world who have asked this question is, can I use the PPP loan to pay my mortgages on rental properties and then have that be forgiven as a self-employed sole owner of an LLC and the LLC owns the properties?
So I guess my thought would be, I think it depends on how the LLC is taxed, but I think as long as it's business property and say for instance you have at ABC LLC for instance, and you have all these rental properties in the LLC, if your mortgage on those properties is through that business, I would imagine that would be eligible. Just because they're business mortgage obligations, but that's just my thought. I think that if the LLC is taxed as a separate entity, it's going to be very, very straightforward and easy. If the LLC is disregarded and you have the rental property on your tax return on a Schedule E, I don't think that's going to work for you, just because this is specific to Schedule C filers. And separate taxable tax-paying entities or other pass-through business entities.
Yeah, so a couple things with the rental properties is they don't pay self-employment tax on rental income. So this is strictly for self-employed individuals who pay self-employment tax. So I don't think paying those rental property mortgages will qualify. The other thing to mention here is, regardless of the obligation of the mortgage, it can only be interest and not principal for the loan forgiveness piece.
Definitely.
Cool. Thank you, guys. I think, Matt, we have a few more good questions too. I feel bad, Anthony, do you have any more slides?
Other than my Q&A thank you slide, no.
Gotcha. Yeah, I think we have some other good questions here. Matt, do you want to read through some of those?
I think we've hit all of them from the chat.
There's actually a couple. So a few people, Linda and Ali, both have this question. If what happens if they get the payroll protection program to cover the next 8 weeks pay because they're self-employed as real estate agents, but they also earn commissions also that are paid during those 8 weeks? Is that an issue?
No, it's not an issue. So essentially that kind of ties back to what Ron was mentioning as far as you want to have a separate account to track the loan proceeds and your other commissions. I mean, it's not, you're not going to be held responsible or penalized in any way for earning income outside of the PPP program during this hardship. I think that it's going to be important just to separate and track the inflow and outflow of the money relative to that, having the PPP loan proceeds and also those costs in one account, and then also having your commissions and any of your other costs that aren't covered under the program in a separate account. But there's no penalty or harm in having income come in from other sources.
I would say there's no penalty or harm, but just make sure that you guys are realizing that you're certifying that you were harmed by this coronavirus during your application. Like you're signing on that to say that you're harmed. So if someone's coming to me and telling me, hey, I'm still earning even more than I was before, it's going to be tough to say that you were harmed and that you should be eligible for this PPP program. Now, if you're saying, hey, I didn't even know the commission was going to come in because the property didn't sound like it was going to get sold, but ended up did selling, I could argue that you were still harmed because it was due to the unforeseen circumstances. You had no idea that commission was coming in. I would just make sure that, like Anthony said, you're tracking those expenses between qualified and non-qualifying.
And that's an awesome point on 2 points too. Number one, as you guys just mentioned, if you guys do apply for this PPP loan and you do get proceeds on the second wave here, whether you got them on the first wave or second wave, DCU even on their spreadsheet where we were one of their multiple rounds of formatting on Excel sheets that they wanted me to fill out, they actually they said of your loan proceeds, how much will be allocated to payroll, rent, mortgage forgiveness, mortgage interest, utilities, and they just wanted to know the projection. So that showed you right there, obviously with payroll being the primary, you wanted to hit that 75% of the payroll mark to hit that forgiveness number. But if that's all in a separate account, that's how you will then show them with that account exactly where that money went. Like 75% went to payroll, right? And the other here's the other, everything else, mortgage interest, rent, utilities, whatever you have there. On the real estate agent side, before we do that, let's get to this question. Damon asked, what if I have a W-2 job that he got laid off from that is separate? Sorry, I didn't mean to call you out, Damon, on that, but it's in the chat box, so your name's right there. If W-2 job that you got laid off from that is separate from his real estate business, can he do unemployment as well as file for his PPP since he's a sole proprietor on that?
You can, you just got to be careful of the timing. As soon as you receive those loan proceeds from the PPP program, you're deemed to not be unemployed anymore. So, I mean, if you can get the W-2 benefit on the unemployment in and start receiving those benefits weekly, because we just don't know when you're going to get that funding for the PPP loan. So you're eligible to do both, but not at the same time. You just have to be careful of the timing in that situation.
Awesome, Anthony. And the last point I'll make on the agency side, we're telling our agents, almost all of our agents are impacted, right? Even if it's delayed closings, right? Even if it's, I have to now get a whole bunch of masks and booties because then that's a whole other expense that they have that they can't sell properties. Like agents specifically have all been impacted by COVID one way or another. And I would make the same argument for real estate investors too. So, I mean, you're making the case, we're also impacted because we're having to now sell virtually, right? All of our listings are now going virtually with Matterport, with very specific guidelines. We're putting our guidelines now, as of literally, we just finalized those guidelines today, where we're putting right in the MLS exactly what we expect from the showing agents, right? So the listing agents and our clients have specific rules that they want to keep safe and wellness, and also just from a guidelines perspective, we want to make sure our showing agents are following those guidelines, unless they need accompanied, which is not necessarily what is in the best interest of all parties. So everyone's been impacted, I would make the argument, and it's definitely we're all in uncharted territory, right? And we're all just kind of getting this as we can. And this CARES Act, specifically this forgiveness element of this PPP loan that is applicable to both employers with W-2 income with employees, as well as individual real estate agents, individual construction contractors, individual vendors, stagers, individual, we use so many people. This has impacted everybody. And if you can get your funds together, not funds, if you get your paperwork together and connect with that local lender, Anthony and Ron can absolutely help you with some of that. But like Ali suggested earlier, last we checked, and there is, I think Linda said above, most lenders, my understanding is that most lenders have stopped taking applications until the second round of funding is approved. But that doesn't mean you can't connect with a local SBA lender. And if you need them, I actually just sent this email out to, I don't know, Matt, there's actually, if you go to the SBA website, sba.gov, someone had emailed me during this presentation and said, my lender turns out not to be SBA approved and they wouldn't take my application. So now what do I do? And right on the SBA website, sba.gov, there's a button. I sent the link out via email, and I wish I had copied and pasted and put it in this chat. But they actually will tell you who around you in your state is a SBA approved lender, but not just SBA approved. They also have a whole checkbox if they are PPP approved, if they know how to do the PPP programs. And that's how we found that DCU, Eastern Bank, Enterprise Bank, Salem 5 Bank, all of these, were PPP approved, which is why those are kind of like the smaller, more regional banks in our area.
You took the words right out of my mouth there. Everything that you mentioned, the commonality of all those banks is they're regional, local, and non-nationalized banks that are having this huge pool of money trying to go through all at the same time. Local regional banks really do seem to have the advantage here. And I think it's as Ron was saying earlier, that now is not the time to be favoriting one bank over your other. If you have that relationship and you've wanted to lean on it, maybe it's now time to go and branch out, no pun intended, to a different branch of a more regional bank that maybe you've thought about or done some business with in the past, who might know you, but you haven't done a specific relationship with, to use this as an opportunity to create that relationship with. The relationships that you're going to use now and create now are going to have dividends for you. I really do believe this in the months and weeks to come.
I agree.
100%. Anthony, Ron, anything else you guys want to add? But while you guys are closing up, please, anyone post in the comments if you guys have anything you want to add, comments, suggestions, questions, and we'll get to those, and then we'll do a transition into our topic for next week.
Yeah, anyone can email us afterwards if they don't want to put it in the chat. If they want to just email us afterwards privately, that's we're more than happy to answer those questions as well. So.
Well, and what's your? Do you want to hit the next slide, Anthony, so they see your email?
Absolutely.
There we go.
I had a couple of things. One, just try not to forget about the economic injury disaster loan either. I mean, if you have, for instance, costs for working capital that you don't see any of your major costs on these PPP slides. I mean, the program's not for everybody, but that economic injury disaster loan is certainly another option, even though that they're also out of funding. We expect another wave to go in there as well. And, there's no obligation to take that economic injury disaster loan by any means. And the application's online. You can do it yourself. There's no need to go through a bank or anything like that. So the SBA economic injury disaster loan is also another option that we didn't touch on too much in our slides today, but we did in our first go round a couple of weeks ago, and also certainly is another option available to you. And then my second point was just to double down on a client story where Ron mentioned he had a client that had $1 million loan that didn't hear back, whereas I had a client that I had no idea whether or not she was going to get a loan. She ended up getting one and being approved, and she's going to have the funds fairly soon. So, I mean, I wouldn't think that your loan's too small to get approved. I would say, as long as you're organized, you have everything together, and and you follow through. I mean, there's nothing that says that you're not going to be receiving a loan just, due to the nature of how large it is or anything like that. So, communication, like we talked about, is key right now. Try to get your feelers out there, try to follow up and see what relationship makes sense, and I guess go from there. Huge.
And to add on that too, the what's the acronym there? EIDL. Right, EIDL loans. On the EIDL loan, so we were one of the first in line to even apply for those. And for those of you guys who have not seen the first presentation that Anthony and Ron gave, feel free to just go to AA Real Estate Group on the Facebook, on Facebook. That's the page. We have the recording there with them going through all of the aspects of the CARES Act and the benefit to business owners and self-employed individuals there. And after we were one of the first to apply, and that was about at least, I think, a month ago, that they allowed us we applied for like 3 companies first, and then they're like, oh, we made everything easier. So we took our 100 pages of paper that we had just, filed and threw it in the trash and just did it on their website. But we just now, we got some of those there's a $10,000 option. Would you like an advance of $10,000? We just, I think Friday night, received the funds from that after a month of waiting, which is good. And we didn't receive the full 10. I guess now it's 1 per employee that you can substantiate or something. Mm-hmm. So, but don't let that dissuade you, and definitely check out that recording if you guys want to see all of the benefits of the CARES Act.
I want to ask this question that just popped in the chat box. So we touched on this last week, and I think this is a good question to put this into a bow with everything that we're just talking about here. Is it worth applying multiple times to EIDL if you haven't heard anything or only did it the one time?
So when you say apply multiple times, are you insinuating that there's more than one trade or business for the taxpayer. So there's multiple like disregarded entities or a situation like that.
I think the question speaks to if they applied for it beforehand and didn't get it, or something through, or they never heard anything on it. Is it worth applying for the loan, that specific program again, or is it better to try the PPP loan? Last time we talked, we were only giving guidance to say, look at which one is best for you and apply for that one. Whereas now people have maybe decided that the EIDL is the one that they really should be going for. Is it worth for them applying for that again if they were denied or have not heard anything yet?
My recommendation was and continues to be, if you have a need for those loans for different reasons, I would apply for both. There's no obligation to take either one. Obviously, you can't take out both loans to fund payroll, but in a scenario where you take out, the PPP loan, to fund payroll and some of the qualifying costs there, but you have some costs that aren't covered under that program, I think it's entirely possible and reasonable to apply for both and see what you get ultimately, as long as they're not for the same reason. There is a little bit of interplay between the two programs as far as, the EIDL loan, the economic injury disaster loan, essentially can reduce the amount that you're eligible for forgiveness on the PPP loan side. And then additionally, there's the opportunity to refinance an economic injury disaster loan entirely into the PPP loan and, consolidate it, if you will. So, my recommendation, as long as it's for different purposes, was and continues to be to apply for both. And I think the economic injury disaster loan is a little bit, I wouldn't say easier, but it's a little more, you're in a little bit more control, whereas you're not relying so much on a banker or something like that, where you can go online, and if you have the documentation and the patience to apply, you can get that in on your own.
And Linda, just in case you meant from your question, if you have applied like we did like 4 or 5 or 6 weeks ago, and you're asking if you should apply again, I would err on the side of not to do it again, because they're going to get your tax ID. They'll probably, it's all robots, right? They're going to scan that, and you'll probably go to the bottom of the pile again. Like it took them 5 weeks just to, get to hours for that advance. So I would suggest not doing it again, especially because you're just going to backlog that system, which is already completely backlogged. But that's just my opinion.
That's what I've been telling the clients too, Nick, is if you've applied and you've gotten a number, like they give you a number that you can kind of, that almost lets you know that they've gotten your application. Just wait. It's taken a long time.
Yeah.
I'm surprised you're the first person I've heard that's gotten the $10,000 grant.
We're the first ones?
Yeah, the first one that I've heard that's gotten it. Yeah.
All right.
People have applied for it,
but we'll take it.
Yeah.
That's awesome. No, Anthony and Ron, as always, you guys are a wealth of information. Thank you for staying on the pulse of this CARES Act and all of what's happening here, because things are changing still day to day. And for the rest of you all listening in, Matt and I, we have an amazing team. We run a real estate investment company. We run a real estate brokerage based in the Woburn area. We run a short sale mitigation debt settlement firm, and we also hold some rental properties too. So we're here just to provide some value. And while we were researching all this information, and we were very thankful that Restivo Monacelli with Anthony and Ron were able to share that information. We just felt it was probably good, and we were going to share it with our teams and vendors, and decided that this was something we just shouldn't have in just for our own internal team. So we opened it up externally to anybody. So if you appreciate this information, number one, please be sure to put in your schedules next Monday at 3 o'clock, the same place. There'll be another registration link that will be sent out. So please make sure you register. And if you really appreciated it, this will be posted. This replay will be posted on the AA Real Estate Group Facebook page. So make sure you share that with people and get them to also register. The bigger and more people that we can reach and impact through this information, the more we can all be of assistance to in this really, really, really tough time. So really appreciate all of you being on. Anthony and Ron, once again, huge value add. Would love to invite you on next Monday. You don't have to promise yet, but we'd love to, hopefully have someone from your firm on next Monday, as we have more clarification on the second round and the 1099 employees. But
As long as you
Matt,
guys find this useful, we'll keep coming on.
Fantastic. Awesome. Matt, anything in closing?
No, I appreciate it. Just piggyback. Thank you, Anthony and Ron, so much, guys. This was awesome. Good information as always.
Stay
Awesome.
safe, stay healthy, everyone.
Absolutely. See everybody 3 o'clock Monday. We'll send the link out. Check the AA Real Estate Group page for the new registration link, and I'll see you there. And Matt, I think you got to end it.
There we go.